Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. If anybody's not aware of this, this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategic or compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, we're going to be looking at a rebuttal of the Congress report into MMTLP. We're also going to be looking at a donation that Clifton Dubose made to Eli Crane and the implications and potential reasons for that. And we're also going to be looking at huge news for MULN Mullen Automotive. So before we get started, let's have a look at what's happening in the market. So first headline here from Fox Business is that Wall Street is currently in an early bull market. So there was a better day today in the market, and we can see here headline from CNBC: Nasdaq extends 3-day streak, S&P closes up 1% ahead of Nvidia earnings. So we're going to try and cover Nvidia earnings later on in the video, so stay tuned for that as well. So let's start by looking at the donation by Clifton Dubose to Eli Crane. So shout out here to Brandon, who's also responded to the breaking news that was earlier shared today by Junk Savvy. So what Brandon has stated here is Clifton Dubose Jr. is the CEO of the successor company to MMTLP. The memo earmarked for WinRed. So we're tagging in Eli Crane. So if we go to the link here and we have a look at the General Election Commission for the United States of America, individual contributions at the bottom, we can see the contributor name is Clifton Dubose. Recipient is Eli Crane. Clifton is identifying himself as self-employed, working for himself, and the date of donation, which I think is very interesting here, is the 13th of September 2022. The donation amount is $1,000, so it's not a huge amount. It's not something that is going to make a significant difference to Eli Crane, and it's not a life-changing amount. So it's a very small nominal amount of $1,000, but still it is a donation, and it is something that is certainly not underhand, and many people do that. But what's more interesting from what I'm looking at is the date of the donation. So this is the 13th of September 2022. And what's interesting is this donation was before the U3 halt. So at around this date of September 2022, we were still expecting everything to happen as normal. So questions to be asked here is, why did Clifton Dubose donate to Eli Crane? Obviously, we know Eli Crane is on board, and a cynic may ask, was there any inside information in terms of anybody knowing what was about to happen, or was it a case of Clifton was looking at obviously hedging the bets if there is a problem in the future? Potentially Eli may be on board. However, no matter what has happened, the good news is Eli Crane is on board, and Eli Crane is part of the member of the 15 Congress members signing that letter and asking for the SEC and Gary Gensler in particular to obviously answer questions in terms of this donation. Obviously, I'm going to leave that to Clifton to maybe answer more questions about why this was made, but coincidentally it has turned out to be positive. Let's now have a look at a rebuttal to Eva Sue's briefing to Congress, and this is a report that we shared in the previous video, so go ahead and check the previous video out. So shout out here to Ozzy Smith, who's posted my rebuttal. So Eva Sue's briefing to Congress: we know the truth, please like, share and repost. So let's have a look at some of the rebuttals shared by Ozzy. And if we look at the first thing here with regard to obviously meme stock, this is something that I did rebut in yesterday's video, but obviously what Ozzy has added in here is obviously we've got the emails from Sam Draddy, and these were 3 different SEC employees concerning MMTLP, so that's a significant source. We've got the Freedom of Information Act. He's also saying the information here is false. MMTLP was a non-voting Series A dividend placeholder, not a share. So a factual error there by Eva, and obviously as a so-called expert in finance and economics, that's something that she should have checked. And further down under social media and memes.trading, what Ozzy is stating here is the writing of the briefing is conveniently choosing to refer to an article in June 2023, which is 7 months after the halt. So again, that's something that I also looked at in the previous video where we talked about her lack of credible resources. So under the section here, FINRA's trading halt, again, what Ozzy is saying, it's important to note that the short volume on the final trading day was just in excess of 9.5 million, with a total volume of 13.69 million. So even if there were no short positions open prior to the final trading, that still accounts for short positions that did not close before the spin-off. Short positions cannot be held into a private company, and again, that did happen. So that should have been identified in the report as well. And obviously we know there are thousands of shareholders who currently do not have official shares of Nextbridge Hydrocarbons. They have placeholders, QSIPs in their accounts, and this is currently 9 months after the distribution date. So under the section MMTLP's creation, listing, deletion and conversion, what Ozzy is basically saying is the information that was false here is that the Series A was afforded to shareholders of record. John Berder's statement is more or less accurate, though exact language is the formal reverse merger between TRCH and MMAT. A market was not expected to develop for trading of the Series A preferred share. It did develop, so I think the report should have focused on the two alleged market makers. So again, further on in this rebuttals, we can see here another thing that Ozzy is saying is incorrect is FINRA's belief that negates the possibility of position close only trading. So this is a common practice where short positions must close prior to a spin-off and shareholders must sell their positions to shorts. So that was a requirement that didn't happen, and this would have no impact on recording shareholders who would receive shares of Nextbridge Hydrocarbons. So remember, shorts are never owners of shares. Retail investors are the owners of shares. So shorts have borrowed those shares and they must obviously close their positions, and that never happened, and that is a very, very important breach of securities legislation. So again, if we skip on to the next section here, which is under short selling and short squeeze, further down, what Ozzy is saying is no short squeeze occurred as a direct result of FINRA's halt. So the U3 halt, if you look at one of my previous videos where obviously I looked at a stock which went from around about $150–200 to in excess of $25,000, and then after the $25,000 U3 halt was implemented by FINRA for MMTLP, most predictions were a price of in excess of $1,000, but that never happened. And obviously with regard to the previous stock that was covered in one of my videos where it did go in excess of $25,000, FINRA did act this time on time. So dealers also expected 2 days of final trading, close only position. We were aware in terms of broker dealers who stated that this was going to happen. And again, there are many screenshots confirming that. And now if we look at the section here under policy discussions, it also states here, by Ozzy, all short positions that remain open currently have untaxed gains as a result of not having to close their positions. So that is something that obviously is a breach of tax laws. If short sellers are able to bankrupt a company via price manipulation, spoofing and naked shorting, they don't have to close their position. So if you remember in my previous video, there was a person covered in the previous video guilty of spoofing, market manipulation, sentenced to jail, given prison time. So that is also something that I think should happen in this case. And in the final section, again, what Ozzy is talking about here is there was no confusion surrounding the final trading date. Everybody is aware of the 12th of December, the final trading date. The T+2 settlement and the record date, 12th of December, would have allowed for a 1-for-1 share distribution on the 14th of December, the original date. FINRA are aware of these dates months in advance. The SEC were aware of these months in advance. So if there were any changes required, they should have taken place much, much earlier and not at the very, very last minute, completely unannounced. What we're now going to do is look at the breaking news with regard to MULN, Mullen Automotive, and headline here from Yahoo Finance. The CEO, David Mitchery, has published an open letter to shareholders addressing the declining stock value. So what I am able to obviously share with you today is that the stock did close up around about 68%, which is quite staggering. At one point, I think it was up close to 80%. So what happened? So obviously we can see here David has addressed the shareholders and he has obviously pointed out some of the key concerns and some of the catalysts. So let's see what he stated in the letter. So he's talked about to the shareholders, and after a number of requests, he's now obviously responding. So what he stated here is, obviously, as the CEO of the company, he'd like to tell all shareholders with regard to the concerns. His primary responsibility is to execute the business plan. Company is going to continue to make significant strides. He's disappointed in the stock performance, and obviously stock traders continue to place downward pressure on the stock, causing it to fall. So obviously that will be a referral to the market makers, the hedge funds and the shorts. So he's also saying, this is the key thing I think that David has stated that I think is interesting with regard to what happened in terms of the price action today. And what he's saying here is, I previously announced the company engaged in share Intel and other parties to investigate what I suspect to be unlawful trading practices in our stock. We are assembling all the data received to date and should have something to announce in the coming days. So I think that is the key catalyst, and that is something that could be huge in terms of the stock price, and that could be huge in terms of news and information in terms of what has happened and what is happening. So he's also gone on to say he's extremely frustrated that the hard work of Mullen's team and the momentum and the success achieved to date has been overshadowed by the unrealistic value of the stock. So he obviously he's committed to the company as well. And further down, if we look at the catalyst, he said the company still has got cash balances in excess of $227 million. The total assets are currently $600 million. Debt is only $7.3 million. They've reported $351.8 million of stock equity. First revenues of $308,000 were reported in June ended period 30th, 2023. So again, all very on paper, all very, very strong catalysts. In terms of the operation highlights, obviously controlling interest in Bollinger Motors, acquisition of Elms. They've received $279 million in purchase orders for Mullen Class 1 and Class 3. Delivery of the first EV campus. So again, the catalysts go on, and obviously final thing he stated, production milestone achieved in August 2023. And again, finishing off by regards from David Mitchery. So I think the key thing that I take from this is where he stated share Intel is going to be coming out soon and more information will be shared shortly. Let's finish off by having a look at the earnings from Nvidia. So just a quick reminder that Nvidia was also added to our weekly watch list, and I did state here that I expect earnings to be beat and could see a run up. So there has been news. So let's have a look at the first headline here from MarketWatch. Nvidia stock soars nearly 10% after hours as an AI chip giant reports record results. So let's have a quick analysis of the results. This is the second quarter fiscal 2024 summary. So if we have a look at here, the key highlights here in terms of revenue, it is up quarter on quarter 88%, year on year up 101%. Gross margin is up 5.5 points. Year on year, it's up 26.6 points. Operating expenses are up 6%, but that's obviously to be expected. But what's interesting more in terms of what's happening with the share price is the net income. That is up currently 203% quarter on quarter, 843% year on year. So these results certainly are outstanding. And if we'll have a look at the bottom, the diluted earnings per share, that is also up 148%, and year on year it's up 429%. So absolutely outstanding results for Nvidia. And finally, if you'd like to get a copy of our next weekly watch list as well as our daily stock alerts, you can join us. Details are in the description below. Thank you very much for watching. Please stay tuned.